Welcome back to the Laptop Trader channel on YouTube. My name's Phil. I'll be your host. Welcome to our community. Here to share my experience and give back to the stock investing and trading community one video at a time. Good luck. There's my contact info, laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for information purposes only. So welcome back. Hope you had a happy Thanksgiving. For our December agenda, we're going to do a quick market review over the last month. Reminder of use basic money management to protect yourself at all times. Then we're going to tie all of the concepts from this year together with a pre-trade checklist. And we're going to use Zoom company, symbol ZM, as an example. And then I went back and watched last January's video. I'm going to discuss some of the predictions I made, what worked and what did not. And then in January 2024, next month, I will again try to predict the market overall for the year and give you 10 stocks to watch or consider for 2024. So let's continue on. So we're just going to start here with a quick chart, a monthly chart of Russell 2000, which is a broad-based index. And this is a monthly chart. So this covers a 5-year period. And I said last year or earlier in January that I wouldn't be surprised if the markets went flat this year. And that's basically what happened to the Russell 2000, which is made up of a lot of smaller companies, smaller medium-sized companies. And so that's what we see there. We've had an uptick from November, December. We're still in this trading range between about 200 and maybe 175 in there. So big trading range this year. Not much has changed. I expect the Russell to maybe move up into the end of the year, maybe move up to the top of the trading range. And then here's a weekly chart of the Russell showing more zoomed in view over a 2-year period. Still slightly down over the 2-year period. So you can see this bounce in November for the Russell 2000. The daily chart shows a somewhat positive picture recently where we had a kind of move up to this level and then another break, gap up, consolidation over 10-12 days. Now Friday we put in a nice range expansion green candle in a breakout over this area. So that looks positive for the Russell going into the end of the year. Then we have the monthly chart of NASDAQ ETF QQQ. That had a nice year so far in the NASDAQ technology ETF. Recently, we've put in what I would call a 3-bar turn here. We had this pullback and then the igniting bar and then the sideways bar. This looks like a continuation higher for the NASDAQ. And similar picture on the weekly chart. We had a pullback over a couple month period and then a lot more buying in November 23. And that looks like a continuation pattern to move higher. Similar picture on the daily chart. We had a move up late October, November, gap up to this new level, and just consolidating right now this last couple of weeks. So that's bullish. S&P 500 on a monthly basis, very similar looking to the NASDAQ. Pretty strong year. We had it started off kind of with a bang and then went sideways for about 6 months. We had some more movement up, and then we had kind of the SPY set up on the monthly chart there. So that looks bullish to higher for the S&P on a monthly basis. Weekly, similar picture to the NASDAQ, bullish over the last month. And daily, again, similar picture with a kind of this breakout to a new level, consolidation, and then end of the week with a breakout. A little bit of a range expansion there on the S&P 500. So that is also bullish for the time being. Real quick reminder of some basic rules to limit your risk up front. Your account size does not matter. Have a trading plan, specific things to look for. Limit your position size to a percentage or a dollar amount per trade. What I would call a catastrophic loss or a gap rule. Okay, so gaps happen all the time in individual stocks. And then finally, if you choose to use a stop loss strategy, use a stop loss, which then allows you to buy more shares than you otherwise would. So that just further reduces your risk. If you're a new trader, maybe try using something like $10 per trade under a stop loss rule. So if you had a 2-hour stop, you could buy 5 shares. That would give you $10 of risk. So let's look at some charts. Let's get our brains working and practice looking at price for our stock or market ETF selection. If we're going to rely on technical analysis, we need to practice and get good at finding the best chart pattern that matches our bias and our trading plan or strategy. So good luck. So what I'm going to do next is I'm going to try to tie this all together with a pre-trade checklist. It's a little bit long because I didn't want to kind of leave anything out. I want to be pretty detailed with that. And we're going to use a Zoom company as an example. So it just allows us to decide where and when to enter or exit a trade using trends, stages, clues, and bar by bar analysis. So we're looking to figure out kind of what direction is the next probable course or next probable direction. So this is just an example of a trade I was in recently. I just made some notes on it. And this is just kind of what I'm thinking when I look at a chart. So I just call this some daily chart clues. So here you can see some moving averages. The blue line's the 20. The green line's the 50 moving average, 50-day. And this red line is the longer term 100-day moving average. So I marked off some pivots with a P there. That's pivot. Here's a higher low pivot, another higher low pivot. It shows that the overall trend is up because the red line is pointing up. I had an earnings event here with a range expansion bar, another range expansion bar going the other way. So I didn't buy over here at all. I also drew off some of these levels right here. This purple line is an area of resistance or a level. We can also see when we go across, there's another level here to kind of match that level, indicating the ceiling could possibly become the floor. We then also had the blue and the green moving averages turning up. So that was another kind of clue. I decided to enter in the green bar right here on this reversal. And sorry about that. So I waited for this price action to take place to match this level over here, and then when this green bar kind of ignited, this range expansion bar, I entered over that bar. That was around the $28 mark. Stop underneath this range expansion bar for me to give us some room. We then had another range expansion bar, a red bar, and then another green bar, which makes this a red bar ignored and or a 3-bar sandwich. We then also had a 3-bar turn right here where we had a red bar, a green bar with bottom tail, and then another igniting bar. So I could have added right here. So there's just a lot going on in this chart that when I look at it, that's what I see. So that's just kind of what I'm looking for. So let's go to the next example. And that's what it looks like without the drawings. Okay, so that's what it looks like without any of my marks. Zoom. So let's start with Zoom. So I'm going to escape from this real quick. I'm going to go to the pre-trade checklist, which is right here. Made this up. Anybody wants a copy, email me, I'll send it out to you. I tried to include it in the slides, but I was having trouble getting the slides and the documents to sync. So I'm going to have to kind of go back and forth between the checklist and the chart. So in order to do that, I need to bring up the chart here. Just type in Zoom. Actually, I can do this portfolio. I can do, just find this chart real quick. Here's Zoom. Okay. We're going to go out to the longer term chart, just a monthly chart. And we can see the trend is pretty clear on the monthly chart. So there it is. So if that doesn't look familiar to you, then you probably haven't been paying attention all year. But that clearly shows the 4 stages of price action. Going left to right, stage 1, a flat stage, then an uptrend, stage 2. We got this topping area of stage 3, and then we have a stage 4 downtrend back to a stage 1 sideways trend or consolidation, which matches the level at the left. So if you bought Zoom 5 years ago or 4 years ago or whenever, you would basically have a break-even trade after 5 years, unless you sold when Zoom was at, like over 500 bucks, or if you sold here when Zoom was at 435. So that's why I pay attention to these trends, because to me it does no good to make money or to not make money and hold something for 5 years. It just doesn't make sense to me because they don't pay a dividend, so why would you? Let's go to our dang it, I'm not gonna be able to do that either. I have to use this. So let's go to our checklist. So first thing I look at before I ever enter a trade, what is the overall market environment? Is the overall market environment up, down, or sideways? I look at these major ETFs like the SPY, the Qs, IWM. I consider how volatile is the market? Is there any major news coming out or expected? Are there any Federal Reserve actions or announcements or possible interest rate announcements? What's the economics general picture? I'm not an economist, but I do pay attention to stuff that's affecting me, like inflation, etc. How about earnings? Is there any earnings coming up on the stock I'm considering? Are we in earnings season? So the reason why we do that is because most stocks follow the market. So quickly, let's take a look at the market, right? So we kind of already did that earlier, but just as a reminder, the overall market environment right now is kind of bullish, right? It's fairly bullish. We had a move down and move up in 23. We've had this pullback, and now we've had an igniting bar, and looks like a continuation higher in the overall market. Same with the NASDAQ. Very similar picture in the NASDAQ. And as I mentioned earlier, the IWM is bringing up the rear with sideways range or sideways trend. But because the general market is higher, this IWM has also moved higher in November and now still moving higher in December. So the market is generally bullish. So Zoom should be participating in that, and it's really not. It's really just gone sideways for quite a long time, about anywhere 16, 18 months. It's just been kind of treading water, going sideways. Not any real significant price appreciation in Zoom. So that is one of our first steps, overall market environment. Then we look at stage analysis. Are we in stage 1, 2, 3, or 4? Well, we already discussed the market is kind of in an uptrend, and Zoom is in a sideways trend or a consolidation, at least on the monthly time frame. Okay, so we've checked that. Current trend analysis, up, down, or sideways. We've already established Zoom is going sideways overall. And then sector analysis and market leaders. Well, Zoom would be kind of part of the communications sector. That sector has been bullish. So if we type in well, I'm not going to type it in, but anyway, just take my word for it. Communications has been kind of bullish, while Zoom has been sideways. So that's where we're at with that. And the market leaders have been very bullish this year. Companies like Meta, Microsoft, Nvidia, AMD. A lot of the big leaders have been bullish. Now, other sectors have not been so bullish, like utilities and consumer staples have been bearish, and retail has been bearish. So we have to consider our next checkbox, relative strength or relative weakness. So I would argue that Zoom so far has been relatively weak for the whole year. So let's zoom in. Well, let's not do that yet. So we've considered that so far, and the next step would be maybe create a watch list and start watching. So that's why Zoom is on my watch list. I've been watching it all year. We can look at patterns. We can identify pictures of buying or selling, right? We can consider the individual stock, stage, and trend analysis, right? So I would argue that Zoom is in basically stage 1, long term. Is the trend changing on my investment? Well, it doesn't appear to be yet. Identify price levels of support and resistance. Well, we can do that right now. We can, without question, say that around the $60 to $61 area would be a pretty strong level of support, and resistance would be above that, somewhere around just above these bars at 100, and over here just above maybe this top and tail bar at 85. So it gives us an idea of what price range we're looking at. So moving on, now we're going to start using multiple time frames. This is key to get to in your analysis. So let's start looking at, we've looked at the monthly time frames. It's a 5-year chart. We've identified the stage, the overall stages. Let's start moving down time frames to see if there's any action that we should be taking, or is there anything that's changing in this lower time frame on a weekly chart over a 2-year period that's changed. Well, I don't really see any major changes on this weekly chart. We have tight price candles. There's no real breakouts or breakdowns. It's just kind of back and forth, back and forth. There is one comment I would make is there is some interest around earnings because there's volume spikes. See this E, the square E, that's earnings. There's volume spikes every time earnings come out, which indicates there's interest in the stock. So here's, you can see every time earnings come out, there's a major spike up to about 8 or 9 million shares. And then on average, it's trading around, 2 to 3 million shares a week. So there's definitely interest in Zoom. The most recent weekly candle, we do have a slight range expansion on the most recent week. So the low on this 2-year period is at about 50, just below 59, and then we close the week at just over $70. So from this low up to here, we've had about 11-point move. So that's not a huge move, but it is something to pay attention to. Okay, so monthly, we're sideways. Weekly, we're sideways for the most part. We've had a slight uptick here. So let's take a look at one more closer time frame. This would be monthly, weekly would be my overall picture I get. And my action time frame for me would be a daily time frame. It can be different for different traders. And so here on Zoom, we can see this is a 3-month chart with daily price candles or price bars. And we can just look quickly from left to right. Price is lower over this time frame overall. So here it closed here, and it closed here slightly lower. Recently, after this downtrend, we've recently made some interesting moves, right? So the low was here, just under 59 bucks. Now we've kind of slowly pushed up here as the market has pushed up over the last month, Zoom has participated recently. So that's not something you would really see on that monthly time frame, but you can see it on this daily time frame. So we kind of moved up here. We had this kind of move up, pull back. We then had a reversal bar. So we had a red bar, and then we had a green bar with bottom tail that reversed course. It went reverse course, engulfed the previous bar. That's called a 180 reversal. So that would be a clue. That would be one of my clues as to what I'm looking for. And then we had this move up. We had earnings. So there wasn't a huge, I would call it a slight range expansion bar on earnings, but nothing huge. We did have increased volume. And then we really had a major increase on volume the day after. The day after earnings came out, we had this range expansion bar, which is about 2 to 3 times the normal range. And it opened here, came down. At one point during the day, this was a red bar, went all the way back up and closed towards the top. And it did leave a little topping tail there, but that is a range expansion bar. And it's also, it's also a gap down. So the previous day price closed up here. The next day it gaps down, was red and closed up. So that is called a bearish gap that bullies. So at one point, that if you had seen that bar maybe at 10 or 11 in the morning, you would think, wow, that's really bad. Zoom's probably going lower for the day. But it ends the day with a green bar. So that's an emotional bar. That's why I'd point that out. Next day, we have a red bar, which opens about where it closed the day before and starts trading down. It basically was red most of the day. It had a little bit of green there, but then traded down. So you would be thinking there, okay, that's kind of this back and forth where here it was here, then it went down here, then it came back up. Next day it opens here, and then it goes down. So that's a bit of an emotional roller coaster right in there. So I would never buy in that area. That's just too much. Then we get this we slowly get this buying, slow and steady buying going up. We then get this bar here, another range expansion bar, which closes over all this. I would call that one another significant bar. Then we get a consolidation over 2 days. And now on Friday, we have this green range expansion or this green igniting bar. So again, we've got another step here, move up, step, another move up, another step, and now another start of the next move up. Only bad thing is we got a lot of resistance right here to the left, some topping tails here. So I don't know if this will continue or not. It should continue. Prices probably should not break down below this area. I would say below 66 would be kind of my point I would get out. But right now, Zoom looks very good on a daily chart, despite the look of these other charts. Again, monthly doesn't look great. 2-year has been bottoming, year and a half. We're finally starting to get some movement in Zoom to the upside. So again, let's go back to our checklist. So that's just using multiple time frames. We went monthly, weekly, daily. Now let's take a look at some of the pivots that are on this chart. So we can kind of gauge, just kind of how strong is this move. I'm going to try to draw these on here for you guys. Let's do this. Let's see if this will work. Alright. Probably should have this going before I started the video. Sorry about that. But that's the way it goes. Alright, so that's on. Okay. So let's go back to the chart. Let's take a look at pivot analysis. Okay, so we'll just draw some stuff here. Use purple. And we'll just start drawing some pivots. So here we had, remember, pivots, a bar with 3 lower bars to the left or right. That'd be a pivot high. A pivot low would be a bar with 3 higher bars to the left or right. So that'd be a pivot low. So here would be a pivot high. This would be a pivot low. And then we would have a pivot low here. And here would be a pivot high. And then here would be a pivot low. So here's another clue. The low, we got a higher pivot low. So that's kind of the start of something. We then get this bar right here. This would be a higher pivot high, right here. And this same bar would also be another higher pivot low. We're starting to change trend, right? We're in this downtrend with these pivots going lower. See that? So it's just the mark of a downtrend. Lower pivots. Now we're starting to change course in real time. And now we've established that. Now we're looking to see where's the next pivot going to form. Well, it hasn't formed yet. So this range expansion bar is the last pivot point. So then we have this move up, this new level, right? An igniting bar, another igniting bar. So this looks like a continuation higher from here. Again, so that's just a little bit about pivot analysis. That may not be the best example, but that's what we're going to use for now. So we've used that. Let's go down to our next check mark. How about price retracement analysis or pullback analysis? So how smooth has some of the moves been for Zoom? Well, this move up was it wasn't really smooth. There's a gap, another gap up, and then we had kind of red bar, green bar. You have some overlapping bars. That's not very smooth. Then we get this 180, this reversal bar right here. So that's that 180 again is a picture of emotion. Then we got to move up with a gap, another gap up, another gap up. So there's a lot of gaps in here. Not huge gaps, but gaps nonetheless. And so that was a fairly strong move when you get those gaps like that. And then we have this earnings. So it was bought up in earnings. And then we got this range expansion bar. And then we had the surprise of this. Again, this is a reversal bar down or another 180 the other way. And then it just started getting bought up. This is a fairly smooth move up. So these aren't overlapping. Where the previous candle closed, the next one opened. The previous candle closed, the next one opened. Then we had a little bit of a gap up here to these red bars, and then another wide green range expansion bar. So I would argue this is a fairly strong move. There's only 2 higher pivot lows in this move. There's 1 higher pivot high. I would call it a fairly strong move, especially since there were so many gaps. So I would say we're not getting these deep retracements. So from here to here, it moved up. It came back, 50, 60%, moved up, came back, let's say, maybe 60, 70%. Then it moved back up. Past that, and now we've got a pretty nice move up. So I would call it a fairly strong period of buying is what I would call that. Fairly strong. So scale of 1 to 10, maybe that's like a 7 on the strength of move. So that just helps when you look at any price retracements and pivots. How about consolidation? Is there any consolidations or corrections through time? Well, we did have a little bit of a consolidation right here. This is more of a continuation pattern, but these 2 bars consolidated or kind of traded in a tight range for a couple days. So that was interesting that we had that consolidation, then another igniting move. So there's a little bit of consolidation there. On a longer term chart, it looks like there's quite a bit of consolidation. And now we've got, so not much to talk about there. Current price versus the widely followed moving averages. I personally use the 20, 50, and 100 on my daily charts, and many people use the 200 period moving average on the daily charts also. So let's take a look at the moving averages. So here again, we can see you got the short-term blue, right? Price is below the blue. And then as it makes this turn, price starts to trend up over this blue line. You can also see the green line that was kind of down, it maybe starting to turn up. The red line is quite flat. So that means the long-term price action has been sideways or consolidating. So right now, where's price? Price is above all three moving averages. So I would call that a bullish indication for the time being. So just quick lesson on moving averages. How about earnings? Well, we already talked about that. We had an earnings event back here on this date, which was earnings were on November 20th or the 21st. Maybe it happened after the market closed. I don't remember. But earnings already happened. So we're past that event. So we've got 90 days to make a trade. So generally, most traders don't like to trade into earnings because of gap risk, right? This could have easily gapped. In fact, it did gap down the next day. It gapped from here to here and was a red bar at one point. So there was some significant gap risk there around earnings. So be careful around earnings. That's why that's a check mark on our pre-trade checklist. I would also encourage you guys to start looking at earnings per share versus the last quarter or last two quarters, and also start looking back to the previous year. Are earnings growing or not? Are sales growing? Are the customers growing? Is revenue growing? Do they have more or profits growing? So earnings per share is one of the most widely followed metrics on Wall Street. So that's important to watch. So let's continue on with our analysis. How about patterns? Do we see a buy setup or a breakout or any flag or wedge patterns or a bottoming pattern or something climactic? So let's take a look at pattern. Can we see a pattern? Well, we definitely saw this bottom out, no question about that. We then saw, I would argue that this candle here broke out over that level. I would also argue that this candle has broken out above this level and above this level. So you have kind of two levels there that we're getting, somebody or buyers are willing to pay more and more for a Zoom company at this time. And it seems to be a fairly strong trend. So I would call that somewhat of a breakout pattern. What else do we have? Moving average analysis. I've already talked about that. Relative strength. I've talked about that. I would argue it's relatively weak to the overall markets and to the sector. However, right now, many stocks are playing catch up, or they're starting to appreciate because people are looking to buy value, or people are looking to buy stocks on the cheap right now because so many major companies have run up so much. So currently, I would argue it's kind of matching the market over the last couple weeks. But over the last year or two, it's been relatively weak. So this looks more to me like a catch-up trade or something that is going to start performing, or something that hasn't performed in a long time that may start performing here now or in the near future. I already talked about the idea of stepping up or stepping down. I'll highlight that again for you, where you've got kind of this down move, kind of next level down, and a step down. Then we kind of stepped up, right? So this is something I look for. Often followed by a breakout, you get the next level or the next step. So it looks to me like Zoom is stepping up at this time. So that's another clue that I look for. And now I kind of keep looking at the chart. How about bar by bar analysis and location? So where this stuff happens on the chart is extremely important, right? So I could tell you guys look for a 3-bar turn or a buy setup, and you could say, oh, there's a buy setup right there. And you know what? You'd be right, but you'd be buying it at the wrong time. It's in a downtrend. There's another buy setup there, but it's in a downtrend. Here's a gap up with a green bar, but it's not the right time because we're still in a downtrend. There's another little bit of a buy setup in a downtrend. So this buy setup, this 3-bar trend that I like to look for happens all the time. So you have to be careful and cognizant of the environment you're in if you're going to use that setup. So bar by bar, we can just see, like this bar kind of set the level and never traded under that bar. Then we had this gap up, another gap up here. We had a red bar with a bottoming tail. Then we had a couple pullbacks, fairly smooth pullback. And then we had this 180 reversal. So that would be, I would call that a significant clue. So I'll put a star by that. This is a level to watch. I put a star by that. That's a clue. Then we had this move up, gap up, sideways, another gap up into earnings, and a fairly strong bar on earnings or the day after earnings. Day after, we get what's called a range expansion bar with a bottoming tail, right? Range expansion bar with a bottoming tail. Pretty significant bar in my opinion, so that would be a clue that buyers definitely stepped up on that day. And the next day, the sellers came in and tried to take it lower, stopped right there, and price has not looked back since. So I would call that a clue, right? That red bar has been ignored. That red bar where sellers try to take that lower is a failure to sell. That was a straight up failure by the sellers after that. Then we get this strong move up, range expansion. Again, kind of a breakout over this area. Another gap up to a consolidation. Now another green range expansion bar, which indicates that buyers are now committed to buying this stock. So there's a lot of clues as to what's going on here with bar by bar analysis. And this closed above all the moving averages in a slight uptrend over the last 2 to 3 weeks. So that looks bullish. So that's just a little bit of bar by bar analysis. That looks good to me. Location, we talked about that. I didn't really see any buy setups on Zoom here. I'm not really seeing, my patented buy setup, but it'll happen at some point. You don't need that buy setup to enter a stock. You can enter on a breakout or a consolidation. Also, I talked about, what a wide range bar is, what a range expansion bar is, what a bottoming tail or a topping tail bar is. Those happen all the time, right? There's a bottoming tail bar right here. There'll be a little topping tail bar. There's a topping tail bar. These in-between bars are like this. That's called a doji bar. It's just a Japanese word. So if you hear that term doji, that's what that is. So these bars happen all the time, but location matters. Next, we look for, are there any bearish gaps or bullish gaps, right? I talked about the bearish gap that bullies up. That's a very powerful signal, and that happened right here on that bar, right? So that was a bearish gap that bullies up. So that is a clue as to what's next. Reversal bar, I've talked about that. There was at least 2 on that chart, or a 180 reversal. One was right here, and one was right here. There's probably some other ones, but here's another one. There's another reversal bar right there. So those happen all the time too. Okay. Then we've got gap analysis. If there's a major gap, move up or down, is it excessive? I didn't see on that chart any excessive gaps. Gap analysis can be a whole topic. Because if you get a major gap up or down with major volume, like volume like this, that is significant. Now this was a gap down, but it was a gap down that bullied. So that kind of negated that gap. Average trading range. Let's talk about that real quick. That's important. So what is the average trading range of Zoom? Well, quick and dirty way to, at least on this platform, to establish the average trading range is to look to the right, and you can see here it's marked off um, every $2, right? 60, 62, 64, so 58, right? So generally that is within that range is about the average trading range of Zoom. Somewhere between $1.50 and $2 is the average trading range of Zoom. So we see anything outside of that, well, we do. We see this bar was about $4 of range, 350. Even this large bar was about maybe 2.25. So that's a little bit out of that trading range, but I don't see anything really excessive as far as anything crazy, as far as a gap or something way outside of the trading range. So if you do see something that's a super huge gap, like like a $10 gap on a $2 stock or something, or you got a trading range of $2 and there's a bar on the chart that's $8 wide, that could be considered excessive. So that's a little subjective, but use some common sense there. Are there any shakeouts of buyers or sellers that would trigger any stop losses? Well, you could argue that this bar could have likely triggered some stop losses. You could argue that this bar could have triggered some short sellers here. What else do we have? You could also argue that this bar could have triggered stop losses for these short sellers here. So that's not super important, but it is an emotional thing because when short sellers get triggered out of a trade, they have to buy to close. And many times that buying creates a larger amount of buying than what was expected, simply because short sellers had to close their trades. Red bar ignored, I did talk about that. Green bar ignored. Those are pretty easy to see. These reversals are basically, this is a red bar ignored and a reversal. This would be a green bar, ignored that green bar. This would be, this red bar ignored that green bar for the most part. But then these next three ignored that red bar. So that just indicates whether buyers or sellers are trapped. I don't see on this chart right now any examples of a 3-bar sandwich. I've got another chart that shows that. So that's just kind of something to consider. 3-bar sandwich, not on this chart. Breakout bar, we talked about a couple of breakout bars on that chart. We don't see a 3-bar turn really on that chart other than in the downtrend. Again, location, location, location. Is there consolidation through time? Well, there is on the monthly and weekly chart. Is that bullish or bearish? It's kind of neutral on the longer time frames, in my opinion, on Zoom. But on the daily chart, there really isn't much of a consolidation. We did see a couple of spikes in volume around earnings. So I generally discount, just to give you an idea of how I look at volume. So you can see down here the average volume, right? It's kind of around that area. And then on these spikes, it kind of doubled. So usually when you get a double in volume or a triple in volume, that's significant. But I discount that when it's by earnings, because there's generally higher interest around earnings anyway. So I kind of watch and see any other spikes in volume. Well, there was one the day after earnings. So I would call that significant, a significant commitment of buyers, especially after price gap down and then price bullied back up like that. So I would call that volume and that bar probably one of the most significant bars on the chart. So volume is kind of subjective. It's definitely secondary to price, but you should pay attention to it. And again, I discount volume by earnings because it doesn't really give you much of a clue as to really what's happening next. Now, if you get a volume spike away from earnings and there's no other event that you can find, then that could be significant. So again, we want to keep looking for clues as to the change of a trend. be a price detective. The more evidence we have, the higher the probability our assumptions will be correct as to the next direction of our stock that we're looking at. So what is price telling us? What are buyers or sellers thinking? Is there a catalyst for change? Okay, that's very interesting too, because one of the catalysts you want to look for is on any stock is earnings, right? So you can find this information almost anywhere. On this platform, if you go to more data on the chart, and we go to here per share, some good information as to earnings per share growth. Well, versus the previous year, we've got over 161% growth. Versus the previous quarter, there was no growth. So there is some growth in earnings per share on Zoom over the longer term. And I think that's why you may start seeing Zoom go up in price. We can look at some ratios like return on equity, profit margin, price earnings ratio doesn't mean a whole lot. But I do like the fact that price earnings was at 67 and now forward it's at 38. So that also indicates that growing earnings, right? While the price of the stock has remained relatively flat. So I'd call that bullish. Return on equity, generally, if you really want to get a good growth stock, you want something over 20%. So that's not huge. Return on assets is not huge. And profit margin, at least they're profitable. You know, it's not a huge profit margin, but they are profitable. So nothing there really scares me. Key stats, we've got net income. Last quarter was greater than their annual net income. So I would call that bullish, right? 141 million over the last quarter versus 103 million over the last year. I would say that is bullish. Revenue growth over this 5-year period is huge, but you have to turn revenue into profits too. So I think there is a bright future for Zoom based on what I'm seeing on the chart and those numbers. But watch earnings growth. So that can be a catalyst sometimes over the long term. So again, let's continue on with our checklist. How about risk versus reward? Is there enough reward on a higher time frame or a pivot to justify taking this trade, like a 2-to-1 reward or 5-to-1 reward? So let's take a look at that. Well, in this chart, in the immediate term, there's not much risk to reward, right? Here would be your next pivot at 71.25. So that's about $1 reward. And you'd probably have to have, probably at least a 250 stop. So I would not consider that a significant risk to reward. Looking more to the left, we have some other pivots over here, 72 and at 75. Now you could argue that, well, if it did keep moving up to 75, that would justify the risk to reward. And I would agree with that. So in my estimation, because of these last couple of bars here with this igniting bar, with this bar igniting a move, this bar igniting a move, and now this bar, I would argue that price should continue through this pivot if there's any strength in this stock, and the price should continue through this area at some point, which you could justify this as a valuable target or a viable target. And unfortunately, as we saw in the weekly chart, the weekly chart doesn't give us a lot of help as far as targets, because the next area on this chart weekly would be about here, around the $76 area as far as the target. So we're not getting a huge risk to reward on Zoom. So you could argue it just on that fact, it may be worth waiting a little bit to get into Zoom. Or you could also do, something like half the shares you would normally buy with a bigger stop loss to give Zoom room to retrace. So let's say you put your stop way down here somewhere. Let's say you put a stop not under here, but maybe under here. And you say, okay, I'm only going to buy 5 shares or 10 shares or something, just to see what happens, right? So 5 shares would be $350. 10 shares would be like over $700 investment. So, maybe buy 5 shares or even 2 shares just to see how this works out. And you can always add later on if you get the expected move. But right now, I would say Zoom is somewhat attractive from certain price points, but risk to reward, it's definitely something you're probably going to have to hold on to if you were to get into Zoom at this time, because I don't see an immediate huge reward versus risks there. So again, continuing on with our analysis. So that's um, after you go through that whole checklist, you just simply go here and say yes or no, right? And then you want to also discuss with yourself in your mind, what is your expectation? That key question, I think, must be answered. My expectation would be for Zoom to continue on this slow path up. I don't think it's going to be an explosive move up in Zoom because they just don't have the profit margin, or I don't see a catalyst to cause Zoom to explode, right? So I would expect higher prices for Zoom going forward, but I could also see a retracement, and I don't see a great risk reward. So for me at this time, I would say I'd be leaning towards no, wait for a better time to get in maybe, especially on the weekly chart. But I could also make a case for yes too, right? There's a lot of positives on that chart. So enter now or wait for more evidence. So for me, I would say I'm going to wait for more evidence, unless I'm just straight up bottom feeding, thinking this is the dead bottom for Zoom. I'm going to buy 5, 10 shares, 100 shares, whatever you're comfortable with, and hold it for the next year. I could see Zoom going up, $100 over the next year. I don't think Zoom's ever going to get back to its highs, or at least not in the near future. You're talking about stock that traded way up there during the pandemic. I do think the work at home revolution is here to stay, at least to some degree, because people like it so much. So that's it. Then from there, enter now or wait for more evidence. Remove, if you choose to remove it from your immediate watch list, like this week's list or today's list, you can always add Zoom to a longer term list, like something you can look at next month, right, or next week, or 3 months from now. But I would definitely encourage you to continue to watch tickers that do not immediately qualify for investment at this time, because things change. And my greatest probably failure in investing has been not to buy Facebook early, not to buy Amazon early, certainly not to buy Nvidia early. I had Nvidia on my list at like 20 or $22, so that was a big failure there. But I don't always see things for what they are, and it's just part of learning. So again, I would encourage you to continue to watch tickers that you're interested in. So that concludes our pre-trade checklist. I wanted to show you a few more charts here that I had populated into the presentation. Let's take a look at those real quick. Again, there's a reminder of Zoom on a long-term trend. Let's close this. Toolbar. Let's go down to, again, there's weekly Zoom, kind of slight, still kind of a sideways consolidation over the last year to 18 months. Recently kind of turned up. Again, it's turned up before, and it just kind of turned up and failed, turned up and failed. So it's been in this range and actually broke that range. So that's one thing I definitely do not like, is that, is this what was the floor over here? Can that become the floor again? Because, Zoom's had its ups and downs for sure. So for me, it's a watch and wait. Here's an example of PayPal. It's a 2-year chart, again, similar to Zoom. Down to sideways. It doesn't look like it's doing much. Another watch and wait. This is an Upwork company. this is an example of what I want to show you guys on this chart is right here. I guess I can't. Anyway, I'll just use the arrow. So, this is a downtrend, and then it kind of moved up and gapped up. At one point during the day, this was a green bar. This big range expansion bar was a green bar. It actually opened here, was green, came all the way down, and was red, 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 and then it retraced and closed there. So this bar is about half selling and half buying. If you think of this bottoming tail as buyers, and this red portion is sellers, this is kind of like a draw. It's a huge range expansion bar. So that's kind of one that is out of the normal trading range. That's what I want to show you on that chart. Here's kind of an example of another buy setup here, but it's in the wrong area. What else do we got there? Nothing else to show you there. Grove again has a couple of bars that are interesting, like this bottoming tail bar. Kind of opened and closed at the same point during the day. It was green, then was red, and closed the day here. So that's an interesting level to watch. It was tested once, twice, and the third time on this bar that gapped down and bullied. So another bar that closed here, opened the day here, gapped down, and then bullied the rest of the day. That's, again, a bearish gap that bullies. That's a very significant event. And a 3-bar turn here, and a breakout. Another example of a breakout there, over a level. And what else can we show you here? This is, I want to show you about gap risk around earnings or the day of earnings on major companies. This does not just happen to small companies. So this happened to Walmart, and this trend looked really good for Walmart. Right, we had a 180 reversal bar here. We had a 3-bar turn here above the moving averages. Another buy setup, 3-bar turn here above the moving averages. Close with the green bar. And next day on earnings, it gapped down from like just under 170 to about 160. Closed the day down around 155, 156. So that is a nasty, nasty gap down on earnings. Be cautious around earnings. That's what I want to show you there. Again, this is an example of why you need to pay attention, because this was kind of a consolidation, and then it just broke down after earnings. So this is another reason why you want to use a stop loss, because earnings can go either way. Upwork, again, weekly chart looks like a consolidation with a couple of good earnings events. So that looks like that may be coming out of the stage 1 sideways trend there. Have to wait and see on Upwork. This is a biotech company. I want to show you this because you've got kind of this buy set up in a downtrend, this 52-week low. Then you have these gaps up, right? You got a green bar, a red bar, and a green bar. This is what I would call a 3-bar sandwich. So that's pretty significant. That means the buyers squeeze the sellers right there. 3-bar example of a 3-bar sandwich. We got Dorian, another example of a long consolidation, very slight uptrend. Then we have a red bar ignored, gap up, breakout, another gap up over that. So that's a pretty strong move up in Dorian, symbol LPG. So that'd be a breakout scenario. Old Republic, symbol ORI, is showing pretty long-term trend of just kind of going sideways. This was COVID, and sideways for most of 23. We finally got this breakout over this area. We had 3 months of sideways price action, failed breakout, and then we finally got a confirmed breakout over that at around the $29 mark. So that is kind of a couple of breakouts and some interesting price action on a monthly chart. So don't forget to look long term. I guess that was the end of the presentation there. I guess that was it. Yeah, that was the last slide. Anyway, what else did I have on the agenda? So we use Zoom as to kind of tie all of these entry concepts together using a pre-trade checklist. What worked and what didn't, I put together a few lists for you guys as to what kind of worked in 2023 and what didn't. Let's take a look at those real quick, and that'll be the end of this video. Let's look at watch list. It's fine. Let's look at 2023 winners. So what worked in 2023? Let's take a look quickly at some weekly charts there. Take a look at, here's one that worked, Williams-Sonoma. That's in 2023, started here. See Williams-Sonoma had kind of a sideways trend and then broke out to a nice uptrend, about a double, almost a double in symbol WSM. Symbol VRT had a pretty long consolidation into April and May of 23, and then just took off from there. That's like a triple, 15 to 45. So that was a very strong performer in 23. Arthur J. Gallagher has been outperforming over the not only the 2-year period, but also the 5-year period. So this one just continues to be like a, I don't know what you would call it, something that just seems to not go down much. Maybe like a power stock or something. But that's a very strong company, Arthur J. Gallagher. Remitly Global had a nice 23 until recently. Again, earnings came out and got crushed. So that's unfortunate for that one. Kratos Defense just had a nice 2023. I think this was, yeah, down here was the low point, and it's been nice, pretty steady uptrend for most of 23. This started 23 around $9 or $10 mark. It's up almost at 20, so almost a double there. LPG had a nice 23. That's in the, I believe that's in the liquefied gas space, energy space. I would argue showing relative strength to like most traditional oil companies. Daktronics had a very nice 23, going from this area around $3 up to $10, so that's more than a triple. Google had a pretty good 23. Didn't start out great, but picked up the pace there. It's had kind of a back and forth, range in here with the big range expansion bar. So I don't know what that means for Google going forward, but that does look kind of negative. Microsoft, market leader, continues to move higher. Had obviously 2022 pullback, but has had a very nice 23. Amazon was beat down pretty good, down to on the $81 area, now up at 147. So that is at a nice 23. About 75-80% move in Amazon. Uber has been a nice surprise and started 23 around the 25, 26 area. Now it's up at 57, so a nice double there for Uber. That looks higher. Limbach Holdings is one on my watch list. Pretty strong. Started the year around $11. Now it's up at 39. So very nice move in LMB. Meta, one of the strongest major companies of the year. Started the year down here around, start the year at this area here around 140. Now it's up at 324, almost 325. So that's very more than a double in Amazon. Nvidia, one of the strongest performers, if not the strongest stock in 23. Went from the 150, 160 area up to $500. thing I don't like about this is this double top. If that keeps pulling back, that would be a big warning sign to me as far as the video goes. So that is an extreme move from 150, 160 to 500 bucks. That's very strong. And I don't know how long that can continue. So Tesla, I would call Tesla kind of a 23 winner. Started out the year with a bang. I went from around the 115, 114 area, shot up, went sideways, shot up. Since then has been kind of a little bit of a downtrend, but closed in so far at 238. So I would call it a win for Tesla, but not the most bullish stock, but I would say pretty good performance for Tesla overall. Finally, let's look at Bitcoin. That has had a very nice 23. Bitcoin started down here somewhere, 18, 17,000 area, up at 41,647 as of this week. So very strong performance in Bitcoin and cryptocurrencies in 23 so far. Now let's look at maybe what didn't work so well. Take a look at this quick list. For the charts, this will be the last ones we look at this month. Rapid 7 was on my watch list. Hasn't done much of anything, pretty much sideways. Most recently, it kind of had a little breakout there. So that's still on my watch list. AT&T has had several years of underperformance. Most recently, it has had this kind of rounded bottom. Looks like maybe can AT&T keep pushing up. It looks like it can. It's gotten over this resistance. Looks like that could continue up to maybe 20 bucks. If you're an AT&T bull. Both AT&T and Verizon, two major phone providers, have just been crushed over the last several years. Centene kind of has not. It went sideways for most of 23. Recently, it has been in a little bit of an uptrend. I do like this bottoming tail this week. So I'd say over that bottoming tail could be a potential buy in symbol CNC, but overall has not performed in 23. Marathon, which is related to cryptocurrency, pretty much sideways in 23. Slight appreciation, but not a lot. Started the year around the 384. I don't know, it's had some appreciation. It's up around 13 from 3, so I guess that is significant when you start that low, but it just seems to get going and then retrace. So it's kind of had some bullish price action in Marathon. I think that Bitcoin and these other crypto related companies could have a nice 24. Symbol TPR Tapestry looked like a decent stock in 23, and then it just kind of went in this stage 3 kind of sideways trend up here, and then got crushed on this bar. So ever since then, it's been in the dumps. Recently, it has had some price appreciation from maybe 26, 27 area up to 32. So maybe that can retrace and repair some of that damage. Doximity, some old docs, still in a downtrend. So extreme relative weakness to other tech companies. RBLX, Roblox Corp, still in a sideways trend. Not performing 23. Etsy, still an overall kind of downtrend. Etsy did look positive here in the beginning of the year. I thought that could be one to watch, and it just never got past this 150 area, 149. Sold off since. So recently, it has had a couple of nice weeks. I like the company, but price-wise, I always said below 100 bucks I like it, and it's at 82. So maybe long-term Etsy. Dollar General has been punished, sold off, and just crushed. Been this long sideways trend, and then 2023 it seemed to have relative strength through 22, right? When everything else was selling off, Dollar General was going sideways. and for whatever reason just got crushed in 23. Recently, it has had some price appreciation from $100, $102 up to 134. So I guess that's one positive for Dollar General. Block, which is a data and kind of, I think it has something to do with Bitcoin too. It's an ETF that recently has had a nice little run. Nice range expansion bar to close the week. I like this ETF going forward, but 2023 really has not performed. Patterson Dental, again, looked like it was going to perform and then it just got crushed again. Earnings came out, got crushed. This reinforces the idea of watch out, watch what you're holding into earnings, or don't hold into earnings, and be careful because things happen in and around earnings, despite the size or the popularity or whatever the company, what industry it's in. Now this just got crushed right back to the bottom of the range in 1 week. So it looked kind of positive and then not so much. So Patterson Dental back to the bottom of the range, not looking good. Shutterstock to symbol SSTK still in an overall downtrend. Recently, it's had some nice kind of buying pressure and some breakouts and kind of a couple steps up there in the weekly chart. Made a 2-year low about 6 weeks ago. So that is on the daily chart. It actually doesn't look too bad, but not a good 23 for Shutterstock. Again, Verizon, not a good 23. Looks like it may be starting to also play catch up or bring up the rear. It has had a nice 6 or 7 weeks here, along with AT&T. So maybe that's the bottom for these phone companies. PayPal, I thought would perform in 23. It absolutely has not. Just continues to underperform. American Electric Power. Again, this kind of looked like it may be able to kind of had some relative strength through the economic downturn in 22 or the market downturn, and then just sold off in 23, end of 22 and 23, and still it's pretty much in a downtrend. And utilities in general have been sold off due to mostly interest rate pressures because they don't really have a lot of pricing power. It's something you need, but it's just not as profitable as something sexy like Facebook or Amazon. So utilities underperforming in general. Major staples companies like Johnson & Johnson underperformed, along with companies like Coke, Pepsi, major General Mills, major food companies like General Mills, flat out sold off and underperformed. Materials and chemicals I thought would do better. They have not. They look like they're going to do pretty good here, between middle of 23 after July and August, they just sold off in general. So that's just an example of that. Chemours company, symbol CC. Recently, it has had some buying pressure. Symbol Sunrun. I believe it's related to solar. Solar has been just an area to avoid the last couple of years. And so much for the green revolution. Rocket companies not performing, just going sideways. So hit the bottom of the range here. Kind of popped up out of the bottom of that range recently. And finally, bonds. TLT bonds. Big nasty downtrend in bonds. Recently, we've had quite a lot of volume in bonds. I'm considering buying some of this ETF now, this TLT. It represents the 20-year Treasury bonds. It's an ETF, and that could give you, if bonds start to outperform in 24 or come back, I think this could have a nice upside potential in bonds because they've been selling off over a long period of time. even over this 5-year period. Look at that. Made a high of almost 180. Now they're half price for bonds. So that is a pretty extreme move for the bond market. So anyway, let's end our video there. I think I covered all the topics. Again, come back here and come check us out in January, first week of January. I'll be doing some predictions for 2024. I hope you enjoyed this video. I think it was one of my better videos. And I hope you guys have a Merry Christmas and a Happy New Year. Again, please consider liking, commenting, subscribing. And again, if you have any questions, you can email me here at laptoptraderphil@gmail.com. Thank you for your support in making this channel a success in 2023. Bye, guys. See you next month.